So, hi everyone. My name is Medha, and I'm going to introduce myself and Ankit today because there are some people who are joining us for the very first time. So, my name is Medha. I'm one of the co-founders of WealthUp, along with Ankit, who's going to be taking the session today. And Ankit's background is that he graduated from BITS Pilani, and even though his education is of being an engineer, but he found his passion in finance. We've been guiding people on how to invest and make smarter financial decisions for almost 3.5 years now. And we do sessions for sure, but we also provide guidance to people who want to talk to us in more detail about their investments. Most of the people who are joining us today are our clients, so majority of them. And then we have about 2, 3 people who are either part of our finance community or have found us through TopMate. So, welcome to everyone. And today's agenda is very simple. We just wanted to address some of the concerns people have around the market and what's happening, what to do next. So, the way we'll do the agenda is first, Ankit will give his overview as to why the market is where it is, what are the factors that are leading to it, some internal factors, some external factors. We'll also talk about what you need to be doing and what some of our clients can expect is our strategy going forward. After this, during the registration process, you had shared some fears and questions that you have that you'd like us to answer. So we'll go through and answer each of those fears and questions. And yeah, I think that should be about 45 minutes. So yeah, over to you, Ankit. Ankit, hello.
Hi, can you hear me?
Yeah, yeah, but I can't see you. Yeah.
Hi. Hi, everyone. Medha has given my intro. Uh, so just jumping right in. Okay, so today we are here to talk about, Medha, I can't see the slide. Are you going to put it up or you're on mute if you're saying something?
I'm saying I'm going to pin you because there's nothing on the slide. So
Okay, all right. Um, okay, so today we are here to talk about the market, what's happening with the market, and what is it that you should be doing. Uh, there is a term that we will be using during this conversation often. So I just want to talk about that first. It's about valuation. It's an important term, so I'm just gonna explain it to you first. Um, Valuation is something that we look at key, okay, if the market is overvalued or undervalued, we use it very often. So what does that mean? There are a number of metrics, but a very common metric that is used is PE multiple, price to earnings multiple. What that means is, suppose a company is earning 10 rupees in profit, how much is it the investor that an investor is willing to pay for a share of that company? Okay, so suppose for 10 rupees of profit, I'm willing to pay 100 rupees, say 10 times. So this is what the P multiple is, 10. Now, if a company is earning 10 rupees, sure, I'm paying 100 rupees. If a company is earning 20 rupees, I'll be willing to pay 200 rupees. So this is how it works. Now, if a company is earning more or growing at a fast rate, the premium, the payment that we are making, the price that we are paying, that can be even higher. We'll be coming to that. Now, the agenda structuring the call today, it will be like, first of all, we'll be talking about why is it that the market is falling. Under this, we'll be talking about internal factors, things that are happening within India, and external factors, the factors that are beyond our control or beyond India's control, happening outside India, factors that outside India that is affecting the Indian market. We'll be talking about this, why the market is falling, and then we'll be also talking about what to expect from the market. Okay, the factors that are there, both internal and external, and we'll be also briefly be touching upon what is it that you should be doing. Okay, now getting into the reason why market is falling, starting with the internal reason. First one is the high valuation. Okay, now why is it that we have high valuation? So what happened was after 2000, the lockdown, people had pent up demand, right? People had money, they were not able to spend it anywhere because they were not able to go out. So many things were closed. And when the market opened, people started spending money. It was also the time when people were getting hired at a very good rate. There were a lot of companies hiring. They were offering very good, CTCs and whatnot, because of which the spending power for people increased. So their consumption increased. What that means is, what the example that I gave about 10 rupees or 20 rupees of profit, what happened was companies, say, who are making 10 rupees of profit, they suddenly started making 20 rupees. So initially the price of companies that was, say, at 100 rupees, that straight went up to, say, 200. There's another reason here why market went up further. Investors saw that this company or this market is growing very rapidly. Okay, from 10 to 20, that's a huge jump. And it is expected that, this will continue. So probably it will become 30, say, in the following year. So let me, the prices will probably be 300. So let me put, say, I'll be comfortable paying, say, 210, 220, maybe 250 for this. And that is why, the PE ratio from 10, it became to, say, 12.5 or 15 or whatever the number was. Now, this is what we call a high valuation. In anticipation that in companies that they have invested in, they will keep growing at a good pace. They'll keep making profit at a good pace. Investors started paying more money for those shares. And that is why, the prices of these shares of the entire market went up and it became overvalued. Now, what started happening, say mid last year, monsoon wasn't great, so that had an impact on the consumption. Also, the increments people were getting, those were limited, and the entire issue of the layoffs that are happening, the uncertainty around the jobs, and we can't forget the inflation. Inflation was also at a very high rate. So that is another reason why we saw that people are not spending as much money, because of which the profit for the users, for the company, started going down. Now, when people were expecting, okay, the profit will go up from 20 to 30, people were anticipating, okay, the price will go up to something like 30. Now they started paying more, but that didn't happen. The profits did not come as it was expected. So instead of, say, 30 rupees, from 20 rupees, it went up to, say, maybe 21, 22. Occasionally, it came down to 18. And that sparked fear. And people started selling, okay, this is not worth at 300. This is not worth at 250, maybe 200 or, 220. Now, when people started selling, there was a downward pressure. The prices started coming down, and that led to more fear. And because of which, more people started. Among all this, when the consumption was on the lower side, our GDP for India, also the GDP growth rate for India, also came at a very unsatisfactory, point. It was at 5.4% for the quarter ending September. So from July to September quarter, it was at 5.4%. When generally our expectation is, close to 6.5%. So that was also a reason people started thinking, is India not growing now? Is that growth story that we've been thinking about, is it no more there? Because of which all of this, there was a fear in the market. Okay, these were the internal factors that affected the market. Now, when all of this was happening, now in terms of the external factor, uh, when the GDP number also came down, the foreign investors, which invest a huge amount of money in Indian market, they also started feeling probably the growth aspect of the growth story of India is no more there for now at least. So they started taking money out. Another reason was China. In first week of October, China was going through their own downturn. The property market had crashed like mid of last year, and the market has been doing very bad. So, investors pulled money out of the Chinese market, because of which it has become actually very cheap. And when the government announced stimulus in China, that attracted the FIAs, the foreign institutional investors. So these foreign investors started moving money from India to China. That was one factor why, money was moving away from India as far as the foreign investors are concerned. Now, with the new government in the US and the risk of US tariff, I mean, if you're aware, US has already imposed a 25% tariff on Canada and Mexico, 25% on EU, 10% on China, and India may be next. Now, this fear of maybe is what is also, just inducing that fear in the market. Now, the fear of unknown, how much of it will be, if it will be there, not there, if it is there, how much will it be, what are the the sectors that will be impacted. With all of these fear, the Indian market is also suffering. In the stock market, I mean, stock market has a tendency to overreact in either direction. And the fear of unknown is actually worse than the unknown itself in the market. And it's the fear that is driving the market, the way it is. So this US tariff is one. Another is Trump is also a very business guy, and he's looking at supporting and growing US businesses, which implies US businesses are expected to give better returns. Okay, and that is another reason why foreign investors are moving money out of India and they're trying to invest in the US market. Also, recently the US unemployment data, it came out well. So unemployment fell, which suggests that the central government of the US, the Fed, they may not cut down interest rate further, like relatively soon, which means that the interest rate over there and the profit that they're getting on the fixed rate investments, they'll be higher. That also makes the US investments more attractive. And with all this happening, wherein we are, the US, the foreign investors, when they are moving money out of India, it is putting a pressure on Indian rupee. So how does that work is, suppose some these foreign investors are selling Indian shares. Say they have sold shares worth, say, 10,000 crore. Now, when they sell these shares, they get money in rupees. So 10,000 crore rupees. Now, if they want to take it to the US, they have to convert it in the forex market, in the international forex market, to sell this Indian rupee and buy US dollars. When they do, there is a pressure on Indian rupee. I mean, it's very simple supply and demand. More people are selling the rupees, so it is under a pressure. And because more people are buying US dollars, US dollar is in profit, or it is in the higher, it's getting stronger. By the way, this is not just Indian rupee. Almost all currencies are becoming weaker compared to US dollar, because it's a trend that most of the investors are moving money to US. So with all of these things, there is a pressure, external factors, because of which there is a pressure on the Indian market. Okay. Now getting into what is it that we should be expecting going forward. On the internal side, the corporate earnings, the profits that the companies are earning, this is expected to be sort of, the slower side for next, say, 2 to 3 quarters, and hopefully it'll recover after that. And why is that I'm saying this? See, when I had this conversation in January with all our clients, when we were giving the quarterly update, I mentioned that the rural demand is the one that is expected to support the consumption piece of India. The consumption or the spending in the urban side is actually coming down. So rural demand is still strong in India. Now, with the tax rate change that was announced, people in India, the urban India, they'll have more money in their pocket. Okay, the two factors. First of all, the tax rate that has been announced now to people earning up to 12 lakhs, salaried people up to 12.75 lakhs, they don't have to pay any tax. So they will have more money in their bank account, more money to spend. Okay. Now, another thing is that all of this has happened only in new tax regime, not in old tax regime. Okay. So people who were, in still in old tax regime and, were saving taxes because of investing here and there, when they were investing here and there, they were blocking that money. Okay. It was not coming out for consumption purpose. And that is why and now, because new tax regime has become much more favorable, I mean, slowly, I'm expecting old tax regime will be removed. So more and more people will be moving to new tax regime. They don't need to make any investments or block their money anywhere, which means even more money left in their bank account, which will allow them to do two things. First, invest some amount of it, save and invest. And second, of course, consume, spend on things, buy, better things, or go out and spend, buy products and whatnot, products and experiences. Because of which both of these will impact the market. How? First of all, when the consumption goes up, the profit of the companies is going to go up, which will, give some confidence. Okay, the companies, the corporates are doing well. So again, the ratio part, the multiple part will come up, the P ratio. So the profit should go up, and profit is going up, price should go up. And secondly, when these people are saving more, they will be investing in the market. So more money flow in the market as well. That should support it, but this will take some time. It was not going to happen immediately. So this new tax regime is this new tax rates are going to hit from being effective from 1st of April. So the first salary with the new adjusted tax rate will start coming from May. Now there will be people who will try to hoard some money initially because of just how we think, right? There has been so many expenses and things are so expensive. And my savings have depleted, so let's build them up a little. Or it may also be the case ki, hey, I have seen so much of losses in my investments because the equity market is down. I've seen so much of losses there, so let's keep some money aside, keep just build some savings over there before I do anything with it. Okay, so for some time, which I mentioned, like just 2 to 3 quarters, probably it will take to for the corporate earnings to see a positive impact. Okay. Uh, on the flip side, if people start spending immediately, like from May when they start getting more money, if that starts happening immediately, we will also see an uptick in inflation. So be aware of it. I don't see that this is a major risk because I don't think that will be a trend generally, because the people who will be affected by this, I mean, in terms of the tax rate change, mostly are people who are making, over 7, 8 lakhs, 10 lakhs. And these are people who are, if they are getting the money, they won't be so desperate to spend it immediately, because it's not that, there were huge cutbacks on their expenses. This was on the internal side, what to expect. On the external side, I expect that FIIs will continue to sell among all the uncertainty of tariff and the attractiveness of US for maybe another quarter, maybe till June or something. And because also the US administration is relatively new, they are also doing a lot of things, and the uncertainty that is associated around it. I'm hoping that by June, the dust will settle and people have much more clarity. And as I said, the fear of unknown is more risky and more impactful on the market. Once people have clarity, they will also know, what to do with money and whatnot. And in the short run, I'm also expecting that there will be, money flowing into China among emerging markets, as we say. There will be more money flowing into China. So Indian market may be affected. So with all this, I'm expecting the market to move in a range-bound manner. Just a smaller range. It will keep moving up, down, moving up, down. So volatility will be there. And in order to have major movement, there need to be a very strong, either positive or negative news to actually move the market materially. And if we look at the various segments of the equity market, large cap is actually trading at around 15% discount if we compare to the last 5 years or last 10 years PE average. The PE, the same thing that I talked about initially. If you look at the PE average of the large cap segment, it is trading at roughly 15% discount to 5-year average, which means it is broadly, we can say it is at a discount of 15%. So it is in a good range that you can consider. And the downside risk is kind of limited. I mean, of course, no one can say this for with certainty about the market, but it's kind of limited. Now, with this understanding, what is it that we can do? First of all, for all our clients, any equity investment that you have made, it has been made from the long-term portion of your portfolio. Any investment that or any money that you need in the short run that has not been invested in equities. So that should give you some comfort, and there is no reason for panicking, because all these investments, equity investment, is anyways done for the long term. And as far as the equity market is concerned, it's their very nature to be volatile. It will move up, it will move down. That is how it functions. If it was going in a straight line and giving more or less a guaranteed kind of return, it would be a more of a fixed income kind of product, which will give you broadly 8% return, 8%, 9% kind of return, not the kind of return that equity provides. That's not the nature of equity market. So it's very normal. Every time people say this time it's different, the different thing is only the different aspect is only the reason. As far as the trend is concerned, as far as the nature is concerned, or how it behaves, it remains essentially the same. Now, for people who are already invested in equity, generally speaking, you should hold your equity position. Okay, you don't need to panic. You don't need to, sell all of it or anything, because market will recover. Okay, India is still a growth story. It will, in the next 15 years or so, India is going to give very good return among most of the markets that we can, think of, most of the major markets that we can think of globally. So as far as these investors are concerned, they will be coming. All right. So this is one thing. If you have funds lying, that you can invest for the long term, you can put it in equity in parts. Don't put all of it together. Put it in parts. Yesterday, Sensex fell over 1,400 points. We reached out to all our clients, and wherever we saw that, and we asked them, okay, if you have money lying around that you want to invest for long term, a small amount of money or whatever, let us know, and we'll guide you where to put this money, how to put this money. Okay, so we have reached out to our clients, and even for our clients where any reallocation was needed, we did that. So if you are thinking of investing, amount of money can be invested at this point of time. And if you are holding bad quality stocks or mutual funds, if you have invested it earlier, or if they're not performing, they were very good at some point of time and they're not doing good now, you should not think that, okay, I'll wait till it recovers. I'll wait till I have recovered, or broken even key. If I bought it at say 100 rupees, and if it is at say 70 rupees, I'll wait till it goes back to 100. If it is a bad investment, if it is a bad performing investment, it's better that you get out of it. Because if it is a bad fund, it is a bad fund. If say the market, the large cap index, if it recovers say 15%, probably a bad performing fund would only recover 10%. And market is not going to care whether you bought it at 100 rupees or 50 rupees or 200 rupees. So if it is a bad fund that you are into, it's better that you get it analyzed. And from there, you move it to funds that are good. And because when the market starts recovering, these are the funds that will, recover better and will give you better returns compared to the bad funds. They're not going to recover as well as the index or the good funds out there. Okay. And in next 1 year, I am not expecting equity market to give great return. Probably around 10% or so, 10 to 12% is what I can expect in the large cap category. Mid cap and small cap are still somewhat expensive. So I would suggest not to put any additional lump sum money in mid cap or small cap. Okay. Medha, so this was the things that I wanted to talk about. Medha, you mentioned that we have few questions from people, right? So if you can bring them up, please.
Yeah, so what we'll do is that we'll give priority to the people who already asked the questions at the time of registration,